What are the best guaranteed lifetime income annuities? Stan, the Annuity Man, America's annuity agent, licensed in all 50 states. Yes, that is me. I'm also the pioneer of contractual guarantees only. But that's a good question about lifetime income, and I kind of wear it on my sleeve a little bit. Actually, on my chest, I heart lifetime income. And I think all of us can say that because we all own the best inflation annuity on the planet called Social Security. So that is the best, but what's the best that's not Social Security? We'll cover that after this. So when you ask the question, what are the best lifetime income guaranteed annuities, there are 4 types, okay? So it really comes down to a couple of things. We've really made it simple, because simple is good. We ask 2 questions. What do you want the money to contractually do? And when do you want those contractual guarantees to start? So let's just say that the answer to number 1 is lifetime income. The answer number 2, which is when do you want that lifetime income to start, determines which of the 4 annuity types that we would use. Single premium immediate annuities, deferred income annuities, qualified longevity annuity contracts, and income riders are the 4 types of annuity structures that provide lifetime income for as long as you're breathing. And if artificial intelligence changes the game and you live forever, it's going to pay forever, okay? So as long as you're breathing and or on a respirator, it's going to pay a lifetime income. So what's the best? I always get asked the question, what's the best annuity you got, son? I mean, this is kind of the same thing. What's the best lifetime income guarantee, son? Well, it comes down to what you're trying to achieve and when do you want it to start. So let's do some examples. If you want the income to start between 30 days up to a year, that's a single premium immediate annuity. End of story, period. Lifetime income, we can structure all of these so that 100% of the money goes to your beneficiaries. So don't hit me with, well, I'd never want an annuity for lifetime income because if I die, the annuity company keeps the money. No, that's not it. We can structure it so that 100% of any unused money goes to your beneficiaries and the evil annuity company doesn't keep a penny even though they're on the hook to pay. So you can set up your life, joint life. Okay, so if you need the income to start within a year, it's a single premium immediate annuity. You can go to my site and you can run quotes to your heart's content on all of these, SPIAs, DIAs, QLACs, income riders. And also on my site, theannuityman.com, you can download free owner's manuals. I've written owner's manuals on all types of annuities that we represent, the 6 main types of fixed annuities that are out there. And you can download those books for free and read about that. Obviously, I've done a few videos on all of these types that you can go down the rabbit hole and learn about them as well. Now, if you want the income to start past a year, then we're looking at deferred income annuities or income riders if it's non-IRA, IRA, Roth IRA. And by the way, Roth IRA you can use with anything. The only annuity that has to be used inside of an IRA is qualified longevity annuity contract. Okay, that's the only one. There's specific rules to that we can explain, but that's a product that was put on the planet in 2014. I was part of all of that the IRS and the Treasury Department developed this so that you would be incentivized to use your IRA assets for lifetime income for you, and they allow your spouse to be attached as well, and that amount of money that you use in the QLAC is not used to determine your required minimum distributions. So it can potentially save you in some taxes on that as well. So people that say, never buy an annuity inside of an IRA. I love it. I really love it when it's like financial journalists say that, and I'm like, you're the dumbest person I know, and I know a lot of people, because QLACs, they can only be used in an IRA, okay? So again, it really comes down to the granular answers that you provide is, what do you want the money to contractually do? In this case, lifetime income. When do you want them to start? Now we're starting to funnel you to what is the product that's going to provide the highest contractual guarantee. Now, on our site, we're going to quote all carriers for lifetime income, A+ or better. I'm going to give you a little rhyme. I don't know if it makes sense, but it rhymes. A+ or better, you don't need a sweater. Okay? A+ or better, you don't need to worry. That's in essence what I'm telling you. You don't need to worry at all. So when we're doing lifetime income, no exceptions, A+ rated or better. So if you go, well, what happens if they go out of business? We're screwed as a country. It's over. hug your loved ones, love the one you're with, start singing that song by Crosby, Stills, and Nash really loud, because that's what it comes down to. Well, it could happen. Well, okay, if it does happen, we're screwed. So A+ or better, and go to sleep at night and have a pacifier. I don't care what, don't worry about it, all right? But if you're saying I need the income to start 2 years from now, 4 years from now, 7 years from now, 10 years from now, then we're going to quote primarily deferred income annuities and income riders and show you the two, and then tell you the good and the bad, the benefits and limitations of both, because no product's perfect. Okay? If it sounds too good to be true, it is every single time. And because we're leading with just the contractual guarantees only, not some hypothetical, theoretical nonsense crapola, then you know what you're going to get, and we're shopping all carriers for the highest contractual guarantees. Annuities are commodity products, meaning that not one's better than the other. They're bidding on your business based upon the need they have to fill your age range within their tranches that they're filling. It's really that simple. So let's just say ABC company, their 70 to 72-year-old tranche of people is kind of limited. A lot of people have died off. They'll raise the guarantee to attract people in there. So don't be one of those, Johnny Analyticals. They're saying, well, I'm going to tell you something, son. I'm going to track the Fed and run my spreadsheets against the Fed, and then we're going to thread the needle and buy it right at the right time. I'm going to time it. You're an idiot. Okay, straight up, life expectancy or life expectancies drives the pricing train, in addition to them needing to fill the tranches. Interest rates play a secondary role. Interest rates play a secondary role. Interest rates play a secondary role. Did you just say something? Yeah, I think I did. Let me think. Yeah, interest rates play a secondary role. Please stop. Please stop trying to be Fed Johnson, Fedmatic, because you're not. It has nothing to do with anything. In fact, if it's 20% of the pricing, great, who cares? The fact that we're looking at all carriers and we're getting quotes from all carriers, they're bidding on your business. That's the reason that these agents that only represent one carrier, that's a dying business model. Love those guys, great logos, great sweaters and all that stuff. But the point is, they don't represent everybody. We do. We actually represent them too. We're just showing you the whole thing. I don't have any skin in the game with any of these companies. Don't go on any incentive trips. Don't accept any gifts. We could care less. All we really want to know is who provides the highest contractual guarantee. And for lifetime income, it's got to be A+ or better. From there, then we start having the conversation. Should it be a deferred income annuity? If you're deferring past 1 year, should it be an income rider? If you're deferring past 1 year, what's the difference between both? If it's a year or less, immediate annuities, how do you want to structure it? And remember, we structure it so that, unless you tell us otherwise, if you say to me, Stan, I hate all my beneficiaries, I hate them, I go to a family reunion with a poison pill in the food, I don't like anyone there. I was going to say bomb, Big C, but that's a little confrontational. But the point is, unless you tell us otherwise, we're going to structure it so that 100% of any unused money goes to the beneficiaries. We can structure it to go in a lump sum, or we can structure it to go in a payment form, which is what I did with my daughters, so that they don't show up at your funeral with a Lamborghini that they paid for in cash. They're paying in payments. Okay? So, I think I've been pretty clear. As they say in A Few Good Men, clear? Yeah, clear? Yeah, clear? Crystal clear. Do me a favor, above me is a link to a video I did on contractual guarantees only, being the pioneer of contractual guarantees only, and only showing that, only recommending that, only signing off on that. You need to know why that's important to us and why that should be important to you. And why really the industry should follow us. And they will eventually. We're dragging them across the finish line. It is what it is. Hey, hit subscribe. Put a comment in there. Be nice. If you want to be mean, send me an email. Stan, or nice, stan@theannuityman.com, stan@theannuityman.com. I will get to them as soon as I can, and you can deal with me. Yeah, me. You're saying, but are you actually real? Aren't you? I mean, you're so fluid. It's like AI. No. AI to the Annuity Man means actual individuals. With that, I'll see you next time.